Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from the Singapore Fintech Festival. And joining me for this segment, we have Ruben Yap. He's the COO of Zcoin. We're going to discuss the impact of blockchain technology on privacy, which is always a hot topic. Ruben, it's great to have you back with us on Trade Talks. And blockchain, it's a liberating tool, that's for sure, but it can also be used to enforce some control. How do you manage privacy on the blockchain?
So, I mean, basically everyone always has been thinking blockchain as this thing that liberates people, and where especially I guess when Bitcoin was the first successful application of blockchain technology. But now when we are starting to move into like government types or like JP Morgan coin, where basically they are running the blockchain and they also have full visibility. So I guess, it's more important to have privacy technologies that actually allow everyone to verify that a valid transaction has happened or what has happened on the blockchain without actually revealing the privacy there.
Right, because it's not only just financial services or cryptocurrency that blockchain technology is being applied to, it's every industry.
Sure.
Anytime you have a start line and a finish line and all the distribution and logistics in between. But what's interesting is Bitcoin might not be as uncensorable as people think. Think about countries like Venezuela and North Korea, and they are amassing digital currencies.
They are. I mean, the recent reports, especially, I think when Venezuela realized that their gold reserves that were stored overseas were not subject to, they could be seized, right? Like basically they had some gold reserves in the UK and UK refused to release it to them despite that being Venezuela's government's money, right? And now, of course, because of that, Venezuela said, well, why don't we look at alternate types of assets which are harder to censor, which I guess has been traditionally thought of as Bitcoin. So as you can see, North Korea and Venezuela are both amassing digital reserves. Now, we haven't seen censorship on a wide level yet. Right now, we're only kind of seeing that, okay, this came from the Silk Road, we're going to censor those transactions. But now with the increased regulation of exchanges, where exchanges now basically they have all this master blacklists, any coins that come from this, no matter how you mix it, still can be traced to a common source, right? So once countries like this start really amassing significant digital currency, I think it's only a matter of time before they say, right, all these coins are under this blacklist, no matter where you go, these coins will not be accepted at any exchange. And that is a form of censorship as well.
Right.
Yeah.
So would privacy coins facilitate money laundering and terrorist financing? Any form of currency, if there's bad actors out there, they're going to find a way to infiltrate the system. So
Definitely.
I don't think, whether it's cryptocurrency or traditional fiat, if they want to do nefarious activities, they're going to find a way to do it.
It's actually really easy. Like there was a recent report, I think, in developing countries, 70 to 80% of all money laundering actually happens through trade-based money laundering. And that actually is just really simple. I just send a product to you, I mark up the value, and then I facilitate money laundering like that. So actually money laundering actually is really, really easy. I mean, like even in this current context. And we are saying that we are serious about money laundering. Why are the large banks getting away unscathed despite being caught red-handed? Like for example, HSBC with the Sinaloa drug cartel. I think no one went to jail, they were only slapped with a little fine. And this is happening over and over and over again. It is banks that are facilitating this money laundering on a large scale. Not to say that, what I'm saying that, yes, of course, privacy cryptocurrencies can be used for nefarious activities, and that is a valid point. And we do believe that, exchanges should be regulated, there should be some sort of oversight there. However, to say that we should be banning all these privacy cryptocurrencies, and right now, like privacy cryptocurrencies or even cryptocurrencies in general, they're a really small part of money laundering right now. Why aren't you?
Yeah, then everything should be banned.
Why aren't you dealing with the elephant in the room, right? So we want to be kind of like a replacement to cash, like a digital form of cash. And one of the really interesting things is like a few countries, especially in Germany, Austria, they have been, despite being so advanced, they have been really jealously guarding their right to have cash. because they see it as a check and balance against government oversight, right? Government overreach. And I think this is really real risk. People don't think like, oh yeah, we trust the government, but what happens when the government goes bad? If someone goes in that is, evil or something like that. Now with full knowledge of whatever you spend your money on, whatever you do, it's very hard to mount any sort of resistance because everyone, has something to hide. Not to say necessarily bad things, but there's just no privacy.
Right. So where does Zcoin fit into this ecosystem?
So right now, of course, Bitcoin is being seen as, like, I guess, the most successful cryptocurrency now. But privacy solutions on it are, I would say, lacking because they usually involve mixing. That means I need to involve people to mix, and it's also really expensive on the Bitcoin blockchain. And it's only merely kind of hiding in the crowd. Of course, there are things like Lightning Network and second layer stuff, but even those solutions are rather hub and spoke like, so they're quite centralized. So it also is questionable whether they can provide sufficient privacy there. So Zcoin, what we do is basically, we allow people to destroy the coins and wipe all the transaction history of their coins, so they can't be related to, like, when you're paying me, I don't know how much you have, where you got it from. While with Bitcoin, let's say if 100 Bitcoin, I send it like 0.01 Bitcoin to you, you suddenly know that I already have 100 Bitcoin, which is information that I don't need to give to a merchant.
Right.
Yeah. So I do think that, we aren't the only other privacy coins out there. Like, we're seeing Monero, Zcash, us, and interestingly, some, because of the FATF travel rule recently.
What is that?
So the FATF travel rule is the Financial Action Task Force. The travel rule actually started in the US, which is basically saying that when a financial institution or something that acts like a financial institution transfers money to each other, they need to attach sender and receiver data, basically to account where is this money coming from when I'm transferring from one financial institution to the next. And now the Financial Action Task Force has recommended that everyone else should also follow this rule. So it's basically extending the US rule to everyone in the world. Now, the Financial Action Task Force is not binding, but if you continuously say that I'm not going to follow these guidelines, you may be blacklisted as a country that's promoting money laundering. So the consequences are really real. Now, that has nothing to do with banning privacy cryptocurrencies. The travel rule also covers cash, which is anonymous by nature, right? But they have been using it as an excuse to ban privacy coins. For example, in South Korea, where exchanges, I think OKX and I can't remember what's the other exchange. There were a few exchanges that were banning privacy coins there, and it was based on this travel rule. When the travel rule doesn't say actually anything about privacy coins, which I feel is an excuse to crack down on privacy coins, which has nothing to do with privacy coins per se. And another also interesting thing is that now they're kind of reconsidering that decision, realizing that this is not the way to apply the law. But in the UK, it's actually quite concerning because the UK have expanded that definition to also include software developers. That means developers that develop this type of technologies. What does it mean that I now need to report? It's a bit questionable how are they going to enforce that, what it means.
Well, it'll be interesting to see how all of this plays out. Ruben, it's great to catch up with you always, no matter where in the world we are. Thank you so much for joining us.
So nice to see you again.
And thank you for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.